Good morning, everyone. Welcome to the morning con call. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, as well as the key levels for both the indices. We'll also be discussing on the main sectors in focus in trade today, as well as the next few trading sessions. First up, coming to the update in the global markets in trade yesterday. So in yesterday's trading session, the US indices closed on a mixed note as investors remained cautious ahead of the Federal Reserve's upcoming monetary policy announcement later this week. So the announcement would be made on Wednesday, the impact of which would be seen in our Indian equity markets on Thursday's trading session. Coming to the update, so the Dow Jones in trade yesterday reached a new all-time high, rising 0.55%. While the Nasdaq slipped 0.52%, while the S&P 500 posted a modest gain of 0.13%. Going ahead for the S&P 500, the positive momentum is likely to continue and test the levels of 5,700 in the short term, while on the downside the support is shifted higher in the zone of 5,580 levels. Coming to Brent oil, so Brent oil has continued its pullback rally and ended at $72.59 a barrel. From the recent low, it has surged by nearly 6%. However, it is still trading below its short and long-term moving averages. If you come to the US dollar index, so the dollar index ended lower for the third consecutive trading session. Going ahead, any sustainable move below the levels of 100.50 will lead to a further correction up to the levels of 99.8 in the short term. Coming to the update regarding Nifty. So in Monday's trading session, the benchmark index Nifty moved within a narrow range of 109 points, marking its smallest daily range in the last 9 sessions. The price action led to the formation of an NR7 pattern accompanied by a high wave-like candle. This pattern reflects a phase of reduced volatility and market compression. On the 30-minute chart, the Bollinger Band also shows signs of contraction, reinforcing the low volatility environment. Historically, such conditions often precede a significant uptick in volatility, potentially setting the stage for a sharp directional breakout. Therefore, a breakout could be expected in the next 1 to 2 trading sessions. Coming to the key levels for Nifty, so talking about level, the zone of 24,430, 24,450 will act as the immediate hurdle for the index. Any sustainable move above the levels of 25,450 will lead to a sharp upside rally towards the mark of 25,540 followed by 25,650 levels. While on the downside, the zone of 25,280 is likely to act as the immediate support for the index. Coming to the derivative data, so on the derivative front, the September futures surged by 0.28%. and the cumulative open interest has dipped by 2.04%. If we see the option chain data, 25,400 strike has significant call open interest followed by 25,500, and on the put side 25,300 has substantial open interest followed by 25,200 strike. Coming to the update regarding Bank Nifty, so Bank Nifty outperformed the frontline indices in trade yesterday, closing above 52,100 level for the first time since July 2024. On the daily chart, it has formed a bullish candle signaling strength in the trend. The daily RSI has surged above the 60 mark and is in rising trajectory, further reinforcing the positive momentum. Going ahead, the index is likely to continue its upward journey and test the levels of 52,500 followed by 52,900 in the short term, while on the downside, if we see, support has shifted higher in the zone of 52,000, 51,950 levels. If we see the put call ratio for Bank Nifty at the current juncture, the weekly PCR is at 1.25, while for the September monthly series, the put call ratio is at 0.86. Coming to the key market indicators, so for the third consecutive trading session, the volatility index has ended on a negative note. It is also trading below both its short-term and long-term moving averages, signaling a bearish trend. This correction suggests a risk-on environment with market participants showing increased confidence. If we see the advanced decline ratio, it remained relatively flat in trade yesterday. Coming to the key sectors in focus, so technically Nifty Bank, Nifty Private Bank, Nifty Financial Services, Nifty Consumer Durable, Nifty Pharma, Nifty Healthcare and Nifty IT are likely to continue their outperformance in the short term. On the other hand, Nifty Oil and Gas is likely to underperform in the short term. Coming to the FII DI data, FII sold to the tune of 1634 crores yesterday, while DIS purchased to the tune of 754 crores. That's a wrap of today's edition of the podcast. Thank you for watching. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.